Guys, welcome to the video. Eventually managed to do it. 12 months down the line, eventually managed to do it. Wasn't easy, was incredibly difficult. One of the hardest things I've ever done, without a doubt. Nothing even comes close to how difficult this is. Okay. Now, in the past, yes, I've been able to be profitable on the month, but it's, you know, it's not something to shout about. But this month, these last 6 weeks, I had a huge change. Absolutely transformed me as a day trader, and seeing that side through struggle and adversity to know where I came from, I said that enough's enough. I'm going to change. I want to be a different day trader, and the main change is trading less and being very specific on what I trade. I only trade a certain setup, and if that setup's not there, I won't trade it. Just because something's moving, I'm not interested. The reason for that, SPI, didn't take a huge loss on that trade, but I paid a decent amount for the shares to borrow. It rips up, and I can't get involved in the backside of the trade because I've been trying to guess the top. And I watched that very closely with a lot of focus, and I started to realize where the edge is as day trader. I seen all the people in my room making money on the backside. I seen all those people on Twitter, all those people on YouTube, all those people on Instagram making a killing on the backside of the trade. And there's me, max lost out, can't do a thing about it. That was the turning point for me. And I was in, I was out, taking paper cuts, and the commissions loss and borrow fees was 3 times my actual loss in the account. And I went from being in a position where I could use margin to being just under that level. And it was a shock. It was a wake-up call for me that something had to change. Something needed to change. I had to change as a day trader, and I said I would never even try and do that type of trading again, because my best wins have always come from them trades, but my biggest losses have as well, and I don't want that. I want to trade with an edge. And I looked deep into my trading, and found what long trades work, what short trades work, and it was all based upon the daily chart. I'm going to go into some stocks now today, and I'm going to give you an explanation of the failures and the edge I found through that bad situation, and how it let me pick the right stock today. There's another video coming which will go into details about why and how I transform myself as a day trader. Today's about these charts. And you know, it is really simple if you put your mind to it and you put that work in. It is that simple. It's that little event. One event just changes all the failures in the past combined together with one event, and you just stop doing those silly things. We've all been that day trader where you look back and you think, what was I doing? Why was I even taking that trade? Just ridiculous. Absolutely ridiculous. Let's get in these charts. 2 trades, 2 stocks, the 2 main gappers of today, the end of October, the best month ever. Let's get into it. Okay, so the first thing you look at, from my perspective as a day trader, is what does the daily chart look like? Is the daily chart looking like something that could be heavy, or something that is light in there's very little resistance, heavy in price above shows that there's a lot of resistance? So the first one we're going to go into is AIRI, Air Industries. Okay, about 20. I think both of them are about 20 million float. They weren't micro floats though, small to medium floats. Okay, so look at the daily chart. That's the first thing I do, and I say to myself, what does this daily chart tell me about this stock? Is it a strong company or a weak company? Has it gapped and failed, or is it within a channel? So the first thing you can see with this one is it's gapped up and then it's failed. So what that tells you is when these stocks go up, you get people who are naive, new traders, day traders, investors, seeing the stock up 50%, 100%, 1000%, whatever, and they jump in, and the next day it slams back down, and they don't want to take a massive loss, they just hold it. And that gives you the term a bag holder. So that's the first thing I look at. What is the daily? What's the bias on the daily? So you've got two charts. What we got here? So since December 2014, it's just sold off and off and off and off, and it's never really been able to. It had a bit of a rally in 2016, but it was weak. It's remained weak. We've had a bit of a rally in January, but what that rally shows you is anybody who was here sold, anybody who's new is holding a bag. So the bias for this one is downtrending for years, pops and massive sell-offs. So we've got an obvious level of bag holders. We know that there's a lot of people with this stock dying to sell at break even. Take away the pain, break even. That's what they're looking for. The other stock, BLRX, okay. Same stock, let's have a look at the daily chart, okay. Lots and lots and lots and lots of bag holders, same situation. So when then we look at, we say, okay, right, well, both of these stocks have downtrending daily charts, okay. So there's lots of people, these are the ones that have massive bag holders. Then you say to yourself, okay, well, out of these two stocks, which one, to me, has the most obvious bag holders, okay. So pre-market for this one is between $1.50 and $2. Pre-market for this one is between $2 and $2.50, okay. So we look at the chart here and we see $2 here to there. Now imagine no one's going to be a bag holder around this area here. It's just grinding down slow. No one's going to buy, no one's going to sell. This area maybe, but it's not really going to have a huge amount of bag holders. They'll have some, you know, it's around the coronavirus time, but it's then popped back up. So you know anybody who was in here had a chance to sell there. Okay, so think about it from where would people be trapped. That's what you want to be doing. I want to be on the right side of the trade. Where are longs trapped? Where are shorts trapped? Always think about that in your trading. So this one here, this one doesn't count. None of this counts. This area is where people are trapped. Okay, July this year. So 260 is really the maximum line where people are trapped as day traders. We're at 250 pre-market. We're hovering around 230. Where do we open? Well, we're hovering around in a channel between $2 and $2.40. So it's giving anybody who's holding a bag an opportunity. It's right next to where anybody who's holding a bag has the opportunity to sell for break even or a small loss. This one, everybody on this stock is trapped from this breakout here. It rallies up between sort of 220 up to 330, 340, okay. So everybody's trapped around this level and then it's flushed back down, okay. All the way up and down depending on when they've taken profits, but this area here. And then you look at yourself, well, what are the key levels in the daily? Well, you can see 150, several touches, that's the key. That's what big money thinks is good value for that company. Above that, no, rallies up, can't break it, because there's no big money interested in that stock at that level. So we take these two stocks, the two main gappers, let's ignore the percentages. Which one do we want to trade long and which one do we want to trade short? Well, this one we know we've got a lot of bag holders above, so when it gets between 150 and sort of $2, it's going to have heavy selling, tons of selling up here. It's going to need a lot of volume to come in to break that, okay. So that's the first bias that we have. This one, not really a lot of bag holders. It's hovering and consolidating within the area of where the last breakout was. That, remember, this is where bag holders could have been. It gaps down. They've had an opportunity to sell here. So the only bag holders for this one are all the way up here. They ain't selling when it pops between sort of $2 and $3. So that's what we can see. We look and see where are people trapped, where are people going to sell, where is the edge in this trade. So BLRX is a long bias trade. It's consolidating. within an area that doesn't have any bag holders, and it's got opportunity to go higher. AIRI, it has a lot of bag holders between $2 and $3.60, and it's consolidating. It couldn't break $2 pre-market, so it's never going to break $2 in the open without a ton of volume. It tried after hours with whatever catalyst it had, and it continues to come along. So you say to yourself, well, where's the key level? What can we say is we've got a try, pop, a test. There's that intersection between that 150 level. It's a daily level, very key daily level, lots of touches on the daily, and it's also a key level that it couldn't really hold pre-market. So we watch this stock. So what you say to yourself is, what can I say is the overall bias on the stock? Well, it's short bias, because I know it's going to take lots of volume to break above that $1.50, $2 to $3 level. I can see pre-market it couldn't even hold into $2 and it's faded off. It's tried again at 186 and it's failed. The spikes into 150, and then we look on the daily and we see, well, what you need to think about as well is, if you've got a stop loss or a limit order to sell a stock at a certain price, it doesn't work pre-market. You've got to wait for the open. So the market makers and the algos can see that, and they say, well, where's more likely for people to be taking profits? Well, that's why they drive the stock down and it fades next to key levels for the open. You can be selling up here in pre-market, but what happens in pre-market doesn't affect retail traders, only institutions and algos. Once the market opens, that's when retail traders stop limits. That's when retail traders' orders are active, and that's what you need to be thinking about when you're taking a trade. So this one, we know this has been resistant several times. It couldn't hold above $2. It's fading back down. So at the open, what do you look for? You look at the volume. This one is a 20 million stock float, and it was trading about 500,000 volume. So it's not a great deal, so you can be confident that it's not manipulated through algos. Algos would be balancing the trade, it would be whipping up a little bit down, and it's obvious if you've been trading long enough. It does that first test in at 150. As soon as you see that spike fail, 150, pre-market support and resistance, and VWAP, all in that same area. The bias on the stock is short. The daily chart tells us it's short. The pre-market levels tell us it is weak. And we have a lot of bag holders on the daily, and we have several attempts on the daily to fail to break and hold above 150. So we short into this level. Don't short and take all your trade in front of that. Give some room, let it pop, fail, add into the downside. Once that little lower high fails, this level here at 130, it's game over. It was the easiest trade of today. Easiest trade of today. If you focus on the bigger picture and take everything together, VWAP at daily level, pre-market, and the volume is just, once that volume fades off down here, and you can see it die, see it? I just shorted it into the pop, had a 147, added on the flush back down, had a little bit of a spike, a bit of a worry, and it broke back down, and I just took it off it, 127. Easiest trade I've ever done. It's 15 cents. Never really worried, never really panicked, not really stressed at all. Everything was aligned, and you just wait for those trades of cheap borrows, medium-sized float, rejecting VWAP, daily levels, pre-market levels, very heavy daily chart. Easiest trade you'll ever do. That's the trade you want to be taking. This is what you want to be looking for. BLRX, let's get to this one next. Okay, we have a daily chart that doesn't really show any bag holders until you get to above $3. This is where you've got people holding. So imagine anybody who's holding down here and it's faded, that's where you're going to have those bag holders. So above $3, it's consolidating, and it's up, it's below, it's testing VWAP repeatedly. It's not a short for me. I wouldn't take this as a short. It's not really a great long, because there's just loads and loads of resistance of people who've held, so you're not going to get a big follow through. This is what you would call a scalp trade. You wouldn't be holding for that big extension, that parabolic. It's very unlikely. You've got unbelievable bag holders all the way up, every 50 cent to a dollar, but we still have that extension. Where does it fail? It fails at $3. Look at the daily chart. One pop fail, second pop fail, and it just rolls over. fails the rest of the day. Look at that. And this is what you want to look at. And what's key is look at the intraday chart. Okay, we can pick a key level, right? Where can we see several attempts and failure to regain that level? $3. Where can we see on the intraday chart several attempts and failures to break above a level and hold? $3. What can we see before that second attempt? Lots of volume, loads of volume. Okay, spiky volume, spikes. What do we see afterwards? What can you see when a stock fails? Hardly any volume. That's what's key to a short. Reduced volume, several attempts, and then the break of that support level, that 280 bounce, fail. See, what you can look at as well is the market makers, once the volume dies, they can do whatever they want with the stock. So what you've got is that key level. Remember, this is where it pulled back and it broke back out, and it sort of tried to hold that 280 level. Okay, and then eventually, it's not an exact science, but it breaks below, flushes down, and you can see a clear break around that support. What do we have? We have a lower high, flush back down, and it tries to intersect and break that level. You've got one attempt here, VWAP, market makers grind it up, it can't, it's weak, it can't break that lower high. There's an opportunity to add, but this happens time and time again. The volume's dead, the stock fails, market makers run it up, nobody's interested in buying. What happens? It rolls over for the rest of the afternoon. The same things happen time and time and time again. Just got to be patient. The algos at the minute as well, I think it gives you a bigger edge because it's so obvious that they're involved. The volume is just insane. The price action is obvious in the fact that it sells off pops, and it doesn't make sense for small caps if you've watched them long enough. If you've been watching small caps long enough, you can see this a mile off. It's so obvious. When the short is a good short, rejection of a key level, rejection of a key level, lower high, break support, retest, fail to VWAP. It's going to try and bounce off VWAP and test that lower high. That's the main one. This is the sort of market maker level where they're not going to run price any higher because they run the risk of being trapped and risking their own money. And it fades down, less volume, fades down. You've got that fade, profit taken for the shorts, and fade again. Keep an eye out for it, guys. The same thing happens time and time again, and once you've watched the market long enough, you can see all of this happening a mile off. You can see the same stuff happen at the open. You can see the same stuff happen later on. The algos are giving us an edge. You've just got to understand how to identify them. Volume and a good daily chart for a squeeze. This one had some dilution, BLRX. Keep an eye out for that as well. Dilution, it's going to go up. They're going to run the stock up, try and sell it to retail traders, and it feels back down once they just lost interest. Market makers are just stepping it down, testing the key level, stepping it down, testing the key level, stepping it down. Draw your lines, guys, as well. Look at that there, that pink line. It was that high, pulled back, made a new high, didn't break below, regained, tested, bounced, failed, cracked, then couldn't break it, and the second attempt along here. Then what you'll do is you look at it as it goes down. You've got this breakout here, this level here next to VWAP, tries to regain it, can't break that previous support, fails again. Look at the line, it's bouncing perfectly, then it cracks, it retests it, and fails again, time and time and time again. Draw your lines, memorize them, see what works, see what doesn't, and I promise you will become a more profitable day trader. I hope you enjoyed today's video. If you did, smash the like button. If you want to see more videos like this, hit that subscribe. I go into a lot of detail. They're not quick videos. I repeat myself a lot, but that's how it sticks in. When I show you this, you can go away yourselves, put your lines on your charts, do your analysis, look at the daily, start to build that subconscious bias of what works and what doesn't, and keep working at it, and I promise you it will stick eventually. Catch you in the next video.